Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Apple report for Thursday, January 12th, 2023. Before I jump into the charts, please click like and subscribe. I appreciate it a great deal. Share the content if you would with friends and colleagues. That also helps us out a great deal. So why am I looking at this? I am going to start actually with, let's see here. I'm going to start with this. The fact that we came off targeted long-term support had been an objective really since October. If you've been following the daily Apple report, we slipped into the low mid 120s, this convergence of two meaningful channel bottoms, able to contain selling not only through January and the first quarter, but possibly into Q2, Q3, as the market is poised for longer-term recovery. The channel top to the channel bottom is in the 170s, which I can show here at 173.80. And this also says a lot. Having come off those convergent channel bottoms I showed in the last slide, we settled 4 days ago above a steeply descending channel top, 125.55. I've got that as a minor point only now because it's coming now, it's dropping at such a rate that it's converging with that long-term support region, and I really don't want to conceptually crowd it out. 122.73 to 123.19 is the actual floor of long-term support. But 128.22 can contain daily selling pressures, and I'll show that in a moment. And above which, 134.62 is likely, possibly today, and really following this buy signal above the 125.55 channel top, the 140s remain a 2 to 3 week target. 142.64, a long-term 1/3 speed line projected off that all-time high from about a year ago, and 148.04 is a pretty classic 4-month channel top. This zone in reach over the next few weeks and able to contain buying through February, possibly into Q2, because from here we could fall back into the low 120s again within several months of testing it. It would be a settlement above 148.04 in the coming weeks that would signal secondary buying into the second quarter, the following 2 to 3 months then in reach of 173.80. So I think 173.80 is possible over the next 3 to 5 months. Probable is another question. I think by the second half of the year anyway, we need to get up and over 148.04 for that to become an accelerated reality. So let's look at the day itself. And we've got this channel top coming down at 133.88, but it really is 134.62, the former channel bottom, the less steep line study that I think. And it also lines up with this low area of 134.37, this double bottom from October, November, 134.62, able to contain buying into later next week. And we can fall off from here again, back to 128.22 or lower. I'll show that in a second. But I wouldn't fall in love with getting short at 134.62 because I do think that the 142.64 to 148.04 region, which is up here, that I showed a moment ago, is sort of drawing the market, calling the market, and I think that the market is likely to reach it over the next few weeks. And so closing above 134.62 is considered an eventuality, and it may actually happen today. And if the CPI number comes in weak, in other words, shows disinflation, if you will, then we could actually push into the 140s perhaps today, 140.02. Not out of the question. I don't think it's likely, but this area here, this double bottom here from late November, December, that's in the 140.02 area. And so is it in reach today if we open above 134.62? Yeah, I think so. And then overall, closing today above 134.62, that 142.64 to 148.04 region, then likely within 3 to 5 days of closing above 134.62, this zone once again able to contain buying through February and meaningful upside continuation into the second quarter if settled above. Now let's cover the downside. What to show. First of all, I'm going to show 130.90. You really can't ignore it. It's been a little sloppy here, but it is the high of the low. We did open above it on Wednesday, slip below it modestly. 130.46 was the low, and we came off of it nicely. So it is still there. It is still there, well suited for aggressive day traders. You can buy 130.90 and take profits in the 133.88 to 134.62 region. And inversely, if we break break 130.90, expect 128.22. And 128.22 is a new, very short-term horizontal channel bottom that is based entirely off the last 3 days. The two highs from early in the week or yesterday and the intermediate low. And so 128.22, pretty classic channel bottom. If you put this on a 5 or 10 or 30-minute bar chart, it would definitely look more textbook. But it is there. It can contain session weakness. We can come off of it again back into the 134.62 region within 2 to 3 days of testing 128.22. Hi, if you enjoy watching our daily Apple report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. And 128.22 is also our downward pivot point into tomorrow and early next week. Were we to close today below 128.22, that 122.73 to, where are you, 122.73 to 123.19 region, then just, you can see it right here, 3 to 5 days at the most from being retested. This area, once again, able to contain selling not only through Q1, but even into later year. I'm going to show the weekly chart now just to give you some proper context. The weekly chart shows the same at 122.67, and it's also backed up by a rising 2/3 B line at 121.20 that is projected off the March 2020 COVID low. This is our zone of long-term support, able to contain selling well into 23 and above which the 170s in reach over the months ahead. And so for those of you who are looking, should I invest in Apple? The answer to that was yes a few weeks ago and still is. But the boat has sort of left the slip, so to speak, not in a big picture sense, but we've moved away from it by about $10. It is nonetheless, if given the opportunity to buy it, this is your area to invest in Apple. It's a good price location into later 23. I'm not trying to dissuade from buying Apple as an investment. You could pick your spots all the way up. The next one would be a settlement above 134.62. And then, of course, we've got the other one, the big one, the more midterm one above 148.04 is kind of pick your spot, but this is the zone to buy. Last thing I'll say here, that if we were to settle any week, and it's not going to happen tomorrow, but by the end of next week, if this thing comes unraveled and we settle back below 121.20 or this convergence speed line channel bottom, then the market remains weak through the rest of Q1 into Q2. The next 2 to 3 months then likely to test 102.73. And as we move into later 23, I wouldn't be surprised to see us continue south into the lower 70s. Over the following 3 to 5 months. You can take this in stair-step fashion, 102.73, nice bounce for a number of weeks off of that area, but as we continue into later year, we may then wind up filling this full channel extension up down to 73.65. And so in terms of investing in Apple, if your time horizon is 1 year out, I would not suggest being invested in Apple if we were to close below 121.20 in the weeks ahead. And that is really all that I think needs to be said. I'll leave you with this image here. Please click like and subscribe if you haven't already. I appreciate it a great deal. I appreciate you watching. I appreciate the likes. I appreciate the comments. And I'd really appreciate subscribing. So that's all I have for Thursday's Daily Apple Report. I'll be back tomorrow, of course, with Fridays, and you have a great evening.